Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It's Monday, another day in the market, another day where you had some small gains tacked on. You had a quick spurt off the open, lots of things moved through Friday's high. Midday, you had a little bit of a pullback, and everyone everywhere started getting all concerned. Now, listen, I understand, there is a little anxious/cautiousness around this area. Even me, I'm a little cautious right now because of a few things. Not calling a crash, not calling 1929 or 2008 or the same thing as 2000, the tech crash, but you have an RSI on the spiders or the S&P that's plus 75. I read a stat today that it was almost, first of all, the highest level it's been since 2012. So you should be a little cautious adding to longs. And also in the top, I think 1.76% of times in the last 20 years. So only, I guess, 1.76% time out of the last 20 years has this market been so overbought. So does that mean you crash? Does that mean you sell your 401k? Does that mean you go, switch gears all over the cross and start, shorting everything? No, it means that if you're trade for P&L or from an active standpoint, you have to be a little careful to see if we could work it off and go sideways and hold higher like we've done each time since breaking out above 902, or do we get a retest of the 8-day? Do we get a retest of the 21-day, which both are still deemed healthy? And I think both the bulls and the bears would like that because it's going on the fact where it's hard to be a buyer here, but if you're shorting, you're losing money and you're probably frustrated and hating the market. So let's just start running through a few things here. So go to the spiders. This was the spot that makes your year at times. A spot where you have to be very careful because it did seem as if we could break this channel here or this ascending channel support, and we could have corrected, but we didn't. Right here, if you spotted the gears being switched, a little bit of a higher high, at least you got short off the brain and then you started looking for opportunities. Then once we closed above this recent range and you didn't have like a breakout failure like you had here or a breakout failure like you did here because it also had participation from tech, the Russell, and whatever, here was your pocket to not fight it and have a nice move. Okay, I know for me, I've made some money, but I didn't perform the way I would have loved to perform, maybe because I have all the noise in my ear or maybe because I just didn't do what I laid my game plan out to do. I do write a morning note, and I have about 15 to 20 ideas on there. Everyone takes them for what they are, and you navigate them themselves. And feels like if 7 or 8 trigger, 3 trigger really well, 2 are wishy-washy and go probably the next day, and the other ones kind of fail and need more time. But anyway, there's a lot on there, and my job for you guys is I'm the offensive coordinator. I throw out the plays for the wide receiver, the tight end, the running back, the quarterback, whatever, and depending on what role you play, you figure out which play you like and you go after it. For me, because I have a gazillion things that go on over the course of the day as a chief strategic officer and as a partner and as a trader and everything and in the media, I pick and choose a few, make some cash flow, trail a few, and try and keep everything moving forward so this way I could get everything out to everyone in a timely fashion. So anyway, but with all that being said, we had a big move. You look at the chart here, and this is a time to get a little excited. And this is a time when you have a gap up that holds, you get a little excited. Up here, not as excited. But it doesn't mean you just could be blindly short. Okay, today looked like we could have had a little bit of a topping tail and didn't. So I would say now, moving forward, let's see if we could stay above this 194.78, which is only about 90 cents lower. And by the time if we did go sideways like we did here to let the 8-day catch up, that would probably get it up there. If it happened quick, it's all the way down here. But trying to be cute for that little short has not been where the money's been made. It's been in actual names. Real quickly on the Qs. Also, if you look at what transpired here, okay, which we've gone over many times, you had your red dog reversal here. Time to switch some gears, cover some shorts if you were riding them lower. And then in this area, you weren't sure. Were we going to negate the right shoulder of this head and shoulders pattern, which looked pretty blaring, okay? But what happened? Negated it right there. Boom. Get short off the brain, especially if we retest and hold. What happened? Retested, held, and went. So now this too, above the 8-day, didn't fall apart today. You could draw a level 1 support, level 2 support. Okay, we've been hugging this 8-day moving average for a while now. So could we shake the tree and get to the 21-day? Maybe. But if we're going to do that, we got to get through this support first and get through that. So, lots of things have to happen first. Go to the XLF that played a lot of catch up last week. This had a strong day. Wasn't thinking about coming in. This was, your time to get somewhat excited there, or maybe when it broke out here. We talked about the banks many times last week, and there you go. So let's just start talking about some individual names. Today, Apple, early on, shook the tree. I think I got 3 different IMs from different sales traders saying, I think you could short Apple now. Maybe you could have done that for about 20 seconds. Anyway, technically, it held the 8-day again. So if you were looking to see, is the composure going to stay the same post-split? What has been happening since the earnings right here? It's been holding the 8-day with lots of setups along the way. Nice consolidation here before breaking out. Another little flag pattern before breaking out. And then what did it do today? Held the 8-day and also gave you a little RDR when it went below 92.06 and came back above it to close strong. So this could continue. The nominal high, I think, is 160. So right now, I think this is a bit of a pain trade where people who want to pull back, just like the market, aren't getting it. Nice leadership here, nice volume, lots of trade stuff to look at. Google, some guys are having success. This is probably one of the things that I'm a little upset about because, in the notes and in the charts, first talked about this descending channel trade, and then here, and then even last week we talked about buying a pullback, and this was the area that was underlined. I think this is still the line from that day, and then lo and behold, a little RDR here at 552, and then crossed 559. Friday, you could have bought the pullback, and now it's still looking good. The reason why you kind of want to just be aware of a potential topping tail is because when these things have huge moves, just in general, you could get a day 2 to the downside. Not saying there's going to be day 3, day 4, day 5, but you look at something like Netflix. If you chased it late, today when it was down $9, you might have been a little worried. And if you were looking for some kind of cute short setup, after Friday's topping tail, you got one. Okay, but look at the move that it's had, so you have to be aware. Okay, this was the technical buy area that it took off from. Here was another secondary trade. Okay, and then finally, a small topping tail. Okay, so if you wanted to try being short, or at least think about being short today, you could have. And then I think in my Redler all axis, I talked about if you can get to below 428, it could see 417, went as low as 420. So little short trade there. Now everyone's calling a top on Netflix. That's it, blah, blah, blah. At this point, you don't know. All you know is that you had a topping tail, cute short, and you have the 8 there right here. We'll see what goes on. Will it hold and go sideways and then maybe give another trade below to test the 21-day? That means the market's probably selling off a little bit. Was this 2-day pullback in Netflix a leading indicator that we might go lower the same way when it broke out? It was a leading indicator that we can go upward? Maybe. So these are just some things that you got to think about when you're buying an extra high, or you're in tier 2 or tier 3 at upper levels. You might want to be just a little bit smarter, stay with it, but know that we've come a long way and you gotta see what's next. And you don't want to be too jumpy and too patient, or not have patience. Because I know today GMCR got a lot of people in trouble. I lost some money off the bat. I'm like, okay, you know what? Let me try and buy 117, 116 because it was the strongest stock in the world on Friday. And if it's going to be good and go through 122, that's what's got to hold. And then you look at GMCR, look what happened here. That is friggin' gross. Okay, not much you could do about that. Okay, this should never have happened. Okay, you had a wide range bar breakout, which some people made good money on Friday. And then you would have thought that it could get some continuation through all-time highs. It's been a leader above all the moving averages. Why not? It was down $2. Good book says go after a stock that was up huge on nice volume. You go here, you put in some volume, and you'll see that there was really nice volume here on this day, so made sense. So opening lower, okay, we talk about in order for a wide range bar or igniting bar to have control over it, it's got to hold the top third or the top half. Once you break the top half, you definitely think twice about whether or not this is going to be pent up, and then boom. Okay, so I know for me, if you look at the 5-minute of it, which had happened really quick, okay, this is when I got involved right here, okay. Actually, no, where was it around? Let's go to the 3-minute. 3-minute chart. Let's see. Oh, there it was. Okay. I was trading other things, and I think right around here is, this was your first little bear flag where it tried to hold the 118, it didn't, so that was your first spot to say, 122 to 118, not super strong. So right around here, I gave it a try. Around 117, tried it, and then I was going to say either I'm going to just hold my nose and go underwater and wait, or you know what, it probably shouldn't have broke this 118, and then definitely shouldn't have broke 116, and then so I lost a little bit of money and got away from it. So now overall, you go back to the chart, and this nullifies the breakout and puts it back here. And typically this is bearish action when you have a breakout failure, or like what happened here, maybe it just needs more time, and this should not have happened, I guess, on Friday. This bar invalidates it, though. So let's move on. Facebook. Facebook. Stock you love to hate. Let's just remove this volume so we can see what's going on here. Stock still is in the game somewhat. You want to look long term. It's not moving at the time frame we want, but you had a trend line that held coming into here, and then you had a wide range bar that it broke above, and now it's still in the channel. It's some of these names have been holding the 21-day and then going, so it looks like it could go still, but something's gonna, I don't know what it's gonna take in order to go, but it's still in there. So maybe you bought it when it got back above 62.15 and you have a decent price, and you're gonna need some heavy volume to break out above 64. I know Yelp, I tried it today and still not enough power. Still hanging around, but it's so hard. Someone said on the site today, which was pretty interesting, if you buy Yelp in the first hour and sell it, you probably could have made 10% in the last month, but if you bought it and you held it, you got nowhere. But anyway, still just hanging in there. LinkedIn, still no volume out of play. Tried to go, and it's just, these are laggard names. Laggard names that are bottom ends of the thing, so you got to be careful. If they come in, they have volume and they stick and they hold areas where they have to, you can stay with them, but if you try it and they don't, you get away from it. Twitter, I have to say, is acting a little bit better. There's been lots of moves since Twitter's been public, from the takeoff and run when nobody was expecting it, creating a huge pain trade to the short side, and some nice calculated longs along the way. If you just look here, this was a pretty technical move, right? Where you had this is when it broke the downtrend, this is when it crossed the IPO high, and then you had a little flag, boom. So let's just get back to where we are now. So now you have. Okay, you have an igniting bar that pulled in a little bit more than people would have thought. Then you had a move up, held again, and now there's I don't think it's a cup and handle, which people are talking about, but if it were to get above 34.89, or this was a prior high of that two-day move, 35.14, you would think it could try and fill the gap. So it's worthy of holding somewhat. It's not a A+ trade, it's not a leader, it's not anything that you should be overly excited about, but if you have some positions on and you're looking for a reason to be long something, Twitter seems like it could be a laggard catch-up trade to the upside. But every time it looks good, you get a down day, so you just got to be a little careful. Tomorrow, if it happens to go above today's high, 34.55 on some volume, I'll probably add. We'll see. Okay, but overall, I do still think it looks okay. Bank of America, nice move in these banks. We talked about if you sold here around the breakout failure when it broke below the 21-day, in this versus gap was a good buy. Gap didn't get filled, showed commitment, was a little wishy-washy in here, and then cleared 1530, and now you have 1584, closed this gap, and that was a nice percentage move. I talked about this actually on Fox Business with Twitter and Apple, and all three are higher since Thursday. Yay, see, the face for radio. I could actually present myself on TV, and anyway, that whatever, that was fun. Meant to be funny, but it's Monday. Red Dog's not that funny. And tomorrow's another day. With the overbought readings, do you get all out? Especially, no, especially if you're a macro guy, or you have swing trades that you've been holding for, a month or two, maybe you just have less into this area. Or if, you have a massive portfolio and you're like, oh, we're a little toppy here, what should I do? Or we're a little overbought, maybe sell some in-the-money calls on all your holdings. Go down a strike to where you feel comfortable, go out 2 weeks or a month selling the money calls that give you a little extra premium if the market happens to pull in. you're protected to the strike, and then all of a sudden we range, we go again. You didn't have to sell your stock. You actually created your own dividend by selling in the money calls, or even some calls a little bit above the price. Some people were asking me today, what should I do at Bank of America? I don't want to sell it. I was like, why don't you go sell the 16s? Sell the September 16s. I think they were 70 cents. So it's like getting you 16.70. Or if we happen to go sideways for a while, you know what? You just took a nice move, and you maybe it goes sideways, and then by September, if it goes to 16.20, comes into 15.80 and hangs out, whatever, you keep the premium, and then maybe you get another setup and you do it again. So there are ways to hold on to positions too after a multi-day move that you might want to just lock in and create some other strategy around it. So in the end, it's all about your time frame, it's all about your risk, it's all about your execution, it's all about your kepi. Got to keep your kepi happy. Otherwise you can have the best strategy in the world, but you're not going to execute on it if you're kind of stuck in translation because of some past trades or some problems at home that shouldn't be hopefully with you at work, because it's hard to execute when you're not thinking clearly about the market. It's hard enough to navigate the market when you're thinking clearly. So if you have outside distractions, maybe do a little less until you clear them up. And that's it. I got a 4:45 boat. Got to jump Monday. See you tomorrow morning.